Hello and welcome to Apex Benefits and Allstate Premier Benefits presentation, Softening the Financial Impact for Employees in the New Normal. I'm Scott Long, Executive Advisor at Apex Benefits. We recognize the impact COVID-19 has had on employers and their efforts to support employees in this new normal. We recognize things are very different for many and that employers are looking for new ways to support their employees. This is the exact reason that we have come together today. We want to share insight into what employees are experiencing and practical, cost-efficient ways you, as the employer, can support them. Apex Benefits is the largest dedicated employee benefits firm in Indiana. As a team of benefit strategists, Apex helps those who feel responsible for employee benefits. We help them create a culture of health and cost savings. Allstate Premier Benefits is one of the largest enhancers of employee benefits in the country. Allstate works with 40,000 employers across the country. Our organizations have a passion to serve, and we're very proud today to be presenting together. Before we jump in, just a quick mention about the chat box off to the side of your screen. Please make liberal use of the chat box as we will be collecting questions from the audience as we move forward in the presentation. We're going to limit the presentation to 30 minutes, and we've reserved 15 minutes of question and answers, and at that time we will be addressing all questions that are collected through the chat box. Representing Apex Benefits today is myself, Scott Long, and Cassie Lamb. Representing Allstate Premier Benefits is Ben Bucher, Brittany Nikovich, and Cliff Hart. Cassie, would you start us off with a round of introductions?
Absolutely. Good morning. My name is Cassie Lamb, and I'm a benefit strategist with Apex Benefits. I work in the Northeast Indiana market, and I'm so excited that you've taken the time to join us this morning.
Good morning, everybody. My name is Ben Bucher. I am the owner of Bucher Family Allstate, which is an Allstate office here in Fort Wayne, and we also handle employee benefits for the expansive Indiana market with employee benefits, and I'm excited to be a part of this today. Thank you.
Hi, my name is Brittany Nikovich. I work in Northern Indiana and Michigan. I've been with Premier Benefits Group for about 5 years now.
Good morning. My name is Cliff Hart. I'm the agency principal for Premier Benefits Group, which covers Michigan, Indiana, and Ohio.
Thanks, guys. Let's go ahead and jump in. To help frame today's conversation on the challenges employees are facing in this new normal, it's important to begin with context that predates COVID-19. For the past 3 years, Apex has administered an employee benefits benchmarking survey that's dedicated to Hoosier employers. Most recently, last year, professionals from over 300 Indiana companies submitted data in 2019 that culminated in a comprehensive source of employer-sponsored healthcare benefit programs and trends that we released in July. Through our survey, we understand employees working for Indiana employers are experiencing rising deductibles and, frankly, significantly higher than their counterparts across the country. Indiana companies, for example, last year saw a 29% increase in median PPO family deductibles. And across the board, Indiana deductibles are consistently higher than deductibles we see across the country. We also know from our survey that deductibles for PPOs and HDHPs climb higher. For more employers choosing to mitigate the impact of families, by using embedded deductibles. We're seeing embedded deductibles more and more. In fact, 80% of all respondents last year indicated that they have an embedded deductible. But for on the other hand, for the 20% who have not explored this plan design feature, employees enrolled in family coverage in those circumstances are in a situation where the total family deductible has to be satisfied for after deductible benefits to kick in. Of course, this can be very expensive for even a small family. We also know that high deductible health plans continue to be extremely popular in our state, in Indiana. According to our survey, 49% of employers report offering an HDHP compared to employers across the United States that are offered at a rate of 29%. Satisfying these high deductibles can truly be a financial burden for many employees. For most, that are listening today, I don't think it's a secret also that the cost of healthcare in Indiana, particularly in the northeast part of the state, the cost of care is high. The national average hospital costs as a percent of Medicare is 241% across, of course, across the country, compared to 311% in Indiana. And finally, the Council for Disability Awareness, their statistics tell us that medical problems contributed to 62% of all personal bankruptcies that were filed in the US in 2007. Of course, this is a 50% increase over the same study in 2001. So add COVID-19 to the mix, and our employees are truly facing economic challenges that many of us involved have not ever seen. So at this time, I'd like to turn over the presentation to Brittany so she can share several practical enhancements employers can explore to soften the financial burden in this new normal for employees.
Great, thank you, Scott. So let's first start off with what are voluntary benefits. So our voluntary benefits, they are designed to help offset medical expenses in the event something were to arise, whether it's an accident, whether it's catastrophic. It's there to soften the burden of that. They are designed to be 100% employee paid. However, with the rising cost of health insurance, we do work with a lot of employers where they pay a portion of it, whether it's 20%, 50%, and we've companies where they pay a certain dollar amount. So instead of saying we're going to pay 100% of this plan, I'm going to give you $50 a month and you can spend it on the coverage that fits best into your family and your lifestyle. These benefits can be also pre-tax payroll deducted to where it's a tax savings for the employee and the company. And all in all, it just rounds out to have a better benefits package to offer to your employees. So types of things that these help offset are going to be your deductibles, your your out-of-pocket medical expenses. However, since the coverages are paid directly to the employee, they get to pick and choose however they want to spend the money. So if they need it to put gas in their car, if they need it for childcare, if they need it for groceries or rent, it is their money and they can use it however they see fit. So because again, these are also a tax-free benefit paid directly to the employee. Not going to go to their medical provider or their health insurance carrier. A lot of employees too nowadays live paycheck to paycheck. So these are just, it's a great benefit to offer at, again, no expense to the company. So these are some of the, these are some of the different coverages that we are able to offer employees. With the exception, the gap coverage is not listed on there, but we're going to go in depth next in regards to it. We can tailor coverages based on what fits best into the company. So if they want a certain plan design, these are all tailored to the company and then also tailored to each employee. So they're all a la carte. They can pick and choose what makes sense for them to have, and it's right at their fingertips, payroll deducted. So the first coverage that we're going to go over is our gap insurance. So how this works is, in order for an employee to participate in a gap policy, they do have to have the employer's medical, the employer's health insurance plan. So if they have it elsewhere, they are unfortunately not eligible for this coverage. But what it's designed to do is it's to help offset those deductibles, those co-insurance. So depending on how the health insurance is set up and how the company wants to design it, and we'll go through a couple different plan options for it, would be how the policy would set up. So it's there, it's a gap filler. It'll help with your deductible, your co-insurance, and your non-office visit charges. Some different things too. So the gap policy, it is guaranteed issue. There is no pre-existing limitation that's on it, and it coincides with your health insurance. So if your health insurance has a renewal date of 5/1, that's when our gap policy would start. If your health insurance had a effective date of January 1st, it would start then too. And benefits can be paid on a calendar year or policy year, but we're gonna tailor that based on how your health insurance plan is set up. Changes too, so if you have to make a change, it coincides directly with your health insurance. Now here are 3 of the different ways that we can kind of set up this policy. So it can be designed to pay first dollar benefit, so where there's no deductible. So if somebody has a $3,000 deductible on their health insurance and we wanted to set up our gap policy to pay the first $1,500, it would pay on $1. To lower the cost of a gap policy, what we could do is we could tack in what's called a traditional gap deductible. So what we would do is, maybe there's a $500 deductible on a gap policy. So the employee, to give them a little bit of skin in the game, they're responsible for the first $500, and then our gap policy would kick in and pay a portion based on how much we want to set it up to cover their deductible. It could be set up to cover all of their deductible and even all of their out-of-pocket expenses if that's what the employer chose to do. It is also eligible for a high HSA gap deductible plan, but federal law states that we have to have a minimum of a $1,400 deductible built on it in order to offer a gap policy. Okay, I'm sorry, I can't find the. Scott, can you move to the next page? I'm having issues with those buttons. Thank you.
Yep.
So here are 2 examples of how it would work. So because it doesn't work with an office visit copay, scenario 1, you go into an office visit and it is a $50 copay, and then you have to have stitches and an x-ray done. So your stitches are $75, your x-rays are $100, so you're walking out and you have a $225 charge. Our gap policy would actually pay the $75 of your stitches and the $100 of your x-rays. So you're responsible for $50 for your copay, because it's not going to cover that office visit copay. Now, if you went in and your doctor's office charges you $50 and your stitches and your x-rays are included in that, and all you have is a $50 charge, your gap policy would not work for that. So your gap policy is not going to pay the $50 because it's already built in. So you go in, everything that you had done, it's just a $50 charge, it wouldn't cover. But if it's itemized out, that's when your gap policy is going to start to pay for those outpatient procedures. And there's also inpatient procedures available too. So now we'll talk about our accident policy. Our accident policy is our by far #1 most popular coverage that we see employees taking, just due to the fact that it's very inexpensive, and a lot of people, believe it or not, there's accidents that happen every day, all day. On the job injuries, there's 4.4 million accidents that happen, and then you can see at home 9.2. There's 4 million non-auto accidents and 2.2 auto accidents. Scott, can you move to the next page? My buttons keep popping up and disappearing. Thank you. So how this policy works is it's guaranteed issue. So there are no health questions that go along with this policy. And the policy, if you had an accident on the policy's effective date, you would have coverage on it. Now, this does not require for you to have health insurance. So the money gets paid directly to you no matter what your health insurance would cover. So if you had the greatest health insurance or you had no health insurance, this policy would pay directly to you. And I've got an example on the next page to kind of show and explain that. So whether it's you, your kids, if it's your spouse, if your kids are playing in a sport, if they're at school, if you guys are on vacation, as long as it's an accident and it happens on US territories, the policy is going to give you some type of coverage depending on what you seek when you go in. Our policies too, like this one, can be portable. So if you were to ever leave, you are able to continue the policy, same cost, same benefit, you're just paying for it on your own. Can you do the next slide too? I'm sorry, my buttons keep going. There you
That's
go.
okay.
So here's an example. So this gentleman was out playing basketball with his friends, jumped up, and he ended up tearing his Achilles tendon. So you can see underneath the claim example, all of the different things that he ended up having to undergo. So he was taken by ambulance, he went to the emergency room, he had medicine, x-rays, he was confined to the hospital, and he ended up having surgery. So obviously all of these things are going to start to add up whether you had an accident policy or not. You've got your health insurance that's going to kick in and cover like it normally would, but you've got your deductibles, your co-insurance, your out-of-pocket expenses. Now you've got to come up with, you know, the money to help offset this. So if you were to have this accident policy, here is an example of one of the many different ways we could establish a plan. So in this scenario, with all of the physical therapy and everything that he had happen, he collected over $3,000 to help towards his medical expenses. So he can use it to obviously take time and relax if he needs to, is pay his groceries and really pay off those medical bills from when it happened. This policy also too offers a wellness benefit. It's an outpatient physician's treatment rider. So what this benefit does is it pays twice a year in the event somebody goes in and they see a doctor for any type of a preventative reason. So teeth cleaning, eye exams, annual checkup. Allstate's going to is going to send the employee $50 twice a year for doing those different types of things, on top of what the coverage is already going to pay. Now, the moment you add somebody to your policy, you're going to get 4 $50 visits every year. So if everybody goes in, they have their teeth cleaned, you turn around, turn it into Allstate, and we'll send you $50, even though your dental teeth cleaning appointment is usually covered through your dental insurance because it's your preventative. So it's at no cost to you. You send it to Allstate, we will still send you $50. So a lot of times, this wellness benefit, if you're submitting it and you're turning it in, pays off the coverage of your accident policy altogether. So these plans are designed to be pennies a day for somebody. So it's very affordable for the type of coverage that you get. Next is our critical illness policy. So what this is designed to do is to help offset, again, those medical expenses in the event something catastrophic were to happen. So every 40 seconds, an American will suffer a heart attack, and every 40 seconds, someone in the USA has a stroke. So this policy too can be designed to be guaranteed issue. So it has no health questions. If we establish this into a new company, there's no health questions that we would ask. You can add your spouse and your children to the policy. And a lot of times the cost to add children is there actually isn't. So if you were to sign yourself up and you had children, we would add them on automatically, but it's paid directly to the employee and they can use it to help offset medical expenses. And this coverage is also portable as well, so they can take it with them. So here is an example of a $10,000 benefit. So if somebody had the critical illness policy, in the event that they had a heart attack, Allstate would cut them a check for $10,000. If they were to have a stroke, it's a $10,000 payout. Organ transplant, cancer diagnosis, it's a lump sum payout of $10,000 in the event that it happened to them. So if somebody was diagnosed with cancer, they don't have to go in and seek treatment in order to receive that benefit. It is just upon being diagnosed with cancer. So as you know, this stuff can be rather expensive. So that $10,000 can go and pay off your deductible, your out-of-pocket expenses, or again, you can use it now towards, again, your groceries, your mortgage, however you see fit. This coverage does also offer a $100 wellness benefit. So there are 24 different tests that are available. If a covered person goes in and has any one of those tests done, we're going to pay $100 once a year per person for doing those. So some of the examples are mammogram, pap smear, colonoscopy, PSA test, EKG. So there's a list of 24 different ones. So if you go in, you have a test done, usually you're doing these at your annual exam anyways, to where it's 100% covered through your health insurance because it's your preventative. You can then turn around, send that to Allstate, and we're going to send you $100 for doing that. So as an example, if you have a family of 5 and each person goes in to turn and has one of those tests done, you could collect up to $500 a year for doing those wellness benefits. Now, one thing that Allstate does too is if anybody were to be diagnosed with cancer, they actually receive a personal letter from the president of the company, along with the chicken soup for the cancer survivor's soul. So they're also there emotionally too. They offer support lines, and there's different ways that we can connect employees if they need help finding the best care. Those wellness benefits that we had talked about, every employee has access to an online portal, so where they can jump online, submit claims, they can do it 24/7. They've got access to it. They can update their addresses and make different kinds of changes. But if those office visit benefits and those covered tests are submitted online, and I recommend doing it for my cell phone. I personally do it for my phone. So if you walk in, you go to a dental appointment, before you leave, ask for proof that you were there that day. You could do it from your phone to where you snap a picture of that piece of paper, upload it through your online portal. If you do direct deposit, that money is in your bank account within 48 hours. So it's a super easy, seamless process to receive your wellness benefit. They can also file there are other claims on there too. So if they had anything catastrophic happen or accident related, there's access to do that as well. And at this time, I'll ask if there's any questions, and then you've got my contact information on there as well.
Thank you, Brittany. At this time, we'll open it up for any questions. If anyone in the audience has questions, please do make use of the chat feature, and we will do our best with all on the call today to answer any questions.
Brittany, one question for you is there a wellness benefit max? So you gave the example of a 5 family member household. If there's 8 family members, is there a max to that benefit?
On the critical illness policy, it is 1 per person per year. So there's no dependent max on the critical illness policy. It's just no more than 1 per person. Then the accident policy, there's a max of 4 per family for that office visit benefit.
And one thing that I had done for our office is for the submissions, if I don't have a receipt, you can just go to my enroll wherever my benefits are, and you can download a PDF, which works just as well as a receipt, and it comes 24 hours later. If you lose receipts like I do, just keep it all digital. That's as easy as can be.
Brittany, would you say that these are the top 3 supplemental benefits that you guys provide?
Yeah, along with probably disability being close to that too. Short-term disability, long-term disability, those, yeah.
Quick question, Brittany, with the products that you've described, are employers able to set up an enrollment, open enrollment throughout the year? Do you typically see groups doing that at the end of the year with their benefits, or can they set up a separate open enrollment for these benefits?
We set it up all based on what the employer is wanting to do. So we've got companies where they prefer to have it all at once, open enrollment, health, and their supplemental benefits. And then we've got some employers where they prefer to have it completely separate. So health insurance renews, 6 months later we go in and now we do our Allstate benefits. So it's tailored based on what the employer wants. We can go back monthly for new hires. We can go back every quarter. We work with the employer based on what they want to do.
I think that's important to take in mind with all that's happening right now. Many clients and employers that we're talking to are looking for solutions that they can bring to bear. Now, not having to wait till the end of the year, if that's when their traditional open enrollment is.
Absolutely.
Great point, Scott. Brittany, why don't you talk about the avenues that companies that want to have this in a COVID pandemic, do they have to wait? And we have opportunities, correct, to meet, to enroll from a safe distance.
Yeah, absolutely. So with everything going on, we can set up a call, kind of like what we're doing now. We've got options to do online employee meetings through Zoom. We've got features to where we can do electronic enrollments, and then we've actually recently have options to where we can get employees enrolled over the phone as well. So we've got a lot of different avenues to enroll employees, with obviously the face-to-face being an issue nowadays.
This has been a really good time to get together, guys, and I'm glad we were able to come together here for a few minutes to provide some insight into how employers can really soften the financial burden, in this new normal as employers are transitioning back to a work at the office environment. So at this time, I am going to wrap up the webinar, but just another round of thank you.
Yes, thank you everybody who came to this. We appreciate it.
Thank you.